Have you ever wondered how we can turn $100 into $1,000, $100,000, or even $1,000,000? So, it's not going to be easy, but in this video I will be covering some tips on how to make sure your money has a high risk of growing instead of going down in value. So, in this video I will be covering first and foremost the lowest risk takings. That could be like setting your money into a bank, and on the end some of the highest risks. But it's important to know that in this start of the video I will be showing the low risks, but that also means you may not be able to have a higher potential of getting a lot of money, but in the end I will be showing you how to really make the big money. So at the start, a high savings account. I will say this is a risk about 1 out of 10. That's very low, and that's because you really can't lose that much money if it's in your bank. So it's nice to have as an emergency fund. So that could be if you just something happens and you need money. If you then take out a loan, they can be very high interest, and you may not be able to pay that loan, and it will cost you very much. But if you have your money into a bank, then you can withdraw your money and spend it to cover your expenses. So when you choose your bank, you need to have a bank that has a high interest rate and accessibility, so you can withdraw your money whenever you need it. And I'm going to show some examples of banks you can use. First ones will be Ali Bank. The next one will be Marcus by Goldman Sachs, and lastly Citibank. Gold. I would say this is a 2 out of 10 on the risk. So why is gold so good? Gold has held its value way better than the US dollar, and that may be because it lasts thousands of years and it can't be manufactured. So what's negative about investing in gold? So when you're investing in gold, I think you will be investing to save so you don't the money doesn't decrease in value, rather than trying to invest to get your money to increase in value. If you put your money in gold, then you don't have your money to invest in other things, and that really limits how much you can grow with your money. So gold is a perfect investment if you have lots of money and you really just need to protect it. You can buy gold physical or online for a broker app. So what's the negative side about physical? So when you buy physical, you really have a seller that you are buying from, and he wants to take a cut, he wants to make money of it. So when you buy online, it will be much lower fees, and if you want to sell your gold, if you have it online, it's much quicker to sell. The next one will be an index fund. If you would have invested $100 every month for 30 years with a 7% annual rate, after 30 years you will be having $123,000. And that really shows how much you can gain your money over time with an index fund. I would say this is the risk of around 3 out of 10. But this has a lot of lower risks than buying a stock individually. And that's because when you invest in an index fund, your money gets transferred over a lot of different stocks, so you diversify your portfolio really good. And that's even without buying different stocks. So the next thing will be buying and selling things you're interested in. I will give this a risk of about 4 out of 10, and that's because you can really make it up what of a risk you are willing to take. And the risk something you can happen to you will be not being able to sell your thing you have entirely, and also if you not being able to sell and you must sell for lower than you originally purchased for. And some of the good things about this is if you, for example, are really interested in pencils, you make pencils yourself, or you're good of knowing what pencil price are going for, you can purchase them online and selling them at your own local place via Facebook Marketplace. you can make a profit. So now, a really popular thing to do, buying stocks individually. I'll give this a risk of about 6 out of 10 because you really can't, if you haven't done that much research, it can be quite a huge risk. You also get the potential to make a lot of money. So, what should you do when buying stocks individually? So first, research is key. And you should also, if you plan on buying, for example, 10 stocks, you should place that, even if it's different companies, they can be in all the same sector, for example, oil. And if you have 10 different oil companies in your stock portfolio, if the oil is going decreasing in value, all your stocks are going to decrease in value. So you should have things in all of the different sectors. So now, something with a huge potential of losing your money, but also a huge potential to make money. That would be crypto. I will give this a risk of about 9 out of 10. So one of the most common crypto to invest in would be Bitcoin. Crypto is extremely risky, but gives you the potential to make millions. Some of the places you can buy Bitcoin is Coinbase and Binance. Lastly, lottery tickets, 10 out of 10 on risk. So why do people buy them? You're very unlikely to make money, but you can make a lot of money. But still, 57% of all Americans buy lottery tickets at least once every year. You shouldn't buy them.